Hello. Thank you for tuning in. If this is your first time, welcome. And if you are a returning viewer, thank you for tuning in. I really appreciate your company. As I've said in many of my other videos, we are trying to gather a community of subscribers who are interested in insurance and superannuation. And if I can add value to 5 minutes of your time, sometimes it'll go to about 7 or 8, and you tune out with some knowledge of and understanding of insurance and superannuation, then it's a time well spent and value that I have added to the community. I wanted to talk about Pmif eligibility conditions, as you probably would have seen from the thumbnail, and that's the new legislation that was introduced on the 1st of April 2020 this year. When you join your employer, once your employer has notified their default superannuation fund, you are likely to receive a welcome letter, a PIN to allow you to be able to access information that's relevant to you as part of you being a member of that fund, to be able to also engage with your fund through electronic means. A number of the product disclosure statements and investment booklets and insurance booklets will all be stored online, but information that is specific to you will be stored behind a PIN, because it'll have information that's relevant to your particular membership. That PIN will allow you to access information about specific sums insured that's related to you, and whether you've got death and TPD and income protection cover. If none of these are making sense to you, you'll need to watch some of the previous videos. But specifically today, I wanted to focus on the complexity that the new legislation has created, as it has turned group insurance within superannuation upside down on its head. Putting members' interest first, or what I would call Pmif for the rest of this video, requires two main things for you to be able to access cover automatically under your fund. And that is, you must have at least a minimum account balance of $6,000, and you must be at least age 25 or over. So for most people, they might actually meet the age threshold of 25, but the account balance usually will be the prohibitive requirement. Given that you've just joined that fund, you wouldn't immediately have $6,000 in your account, and therefore that is a condition that you'll need to overcome by making an election if you want your insurance cover sooner than actually meeting that account balance requirement. So let's tune into the video, and I'll come back at the end and close off on what else needs to happen. Using the following slide decks, I'd like to demonstrate an example of Pmif's eligibility rule when you elect to have insurance cover. Let's use a timeline to demonstrate the Pmif eligibility conditions when you're electing to have insurance cover. The first period usually commences from the date you receive your welcome letter. This will come from your super fund once they are notified by your employer that you have commenced employment with them. The second period is usually after the agreed election window period with the insurer. The first period often provides for a more generous cover condition, while the second period, which is after the agreed election window period, is more onerous. This election window period can vary from 30, 60, 90, or 120 days. For this example, we will use 60 days. During the first period, if you are at work and actively performing the duties you were employed to do, then you should get cover from the date of your election, with limited cover for only the first 30 days. If you delay making an election until the second period, then your cover will be subject to limited cover for up to 12 months. That's from the date of your election. At the end of that period, you'll need to satisfy that you're at work and actively working before the limited cover condition ceases to apply. Here's some additional information worth noting. Initial cover is almost always subject to limited cover or new events cover. This means you're only covered for injury or illness that occur for the first time while you're a member of the fund. If you make an election in period 1, then a shorter limited cover period will apply. If you make an election in period 2, then limited cover is longer, sometimes up to 24 months. The difference between period 1 and 2 can be up to 120 days. Sometimes there's a period 3, and that means you need to be underwritten. Some funds require a 30-day at-work test to be in addition to, not included in the limited cover period. And of course, cover will always be subject to having sufficient account balance to pay for premiums. Okay, I hope you found that little slide deck presentation useful, but the moral of the story here is if you want cover before you satisfy the age threshold of age 25 or before you reach the minimum threshold account balance of 6,000, you can make an election to have cover, and the key requirement there is you must make an election as soon as you receive your welcome letter. Don't wait too long, because if you wait too long and you go over that window period into the second part of that window period, then you will probably get cover, but with more onerous conditions, which is that limited cover that I was talking about. So it's best to actually get in early, engage with your insurer or your fund and say you'd like to elect to have cover sooner or ahead of time prior to meeting your age or account balance threshold. Thank you again, and I hope to see you next video. And if you would like, please subscribe and support the channel. Thank you.